G'day Gain Squad! Your Aussie property dream just got hit by a financial sledgehammer, and the Middle East is on the brink of an energy meltdown. Is the global financial system about to do a proper disappearing act, or is there a cheeky golden trade hiding in the rubble? Today we are exposing the massive energy blockade, the Aussie tax reset, and why the Magnificent Seven are breaking up for good. We will dive into copper's record highs, the de-dollarization push, and how Bitcoin is surviving a massive United States inflation shock. Plus, we have the fresh Hyperliquid ETF launch and the technical levels you need to protect your goal-getting gains this week. This is for informational purposes only. I'm just a gal with an interest in financial freedom. Do your own research, as this isn't financial advice. So, the big question is, with the new negative gearing rules, are you selling property or piling into metals and crypto? Let me know your strategy in the comments, and while you are there, smash that like and subscribe to join the squad. I am your host, and we are coming to you live from Sydney on May 13th, 2026. It has been a week that would make a wallaby dizzy, so grab a flat white and settle in for some serious market data. What is the biggest breaking news story rocking the global markets and our energy security right now? The headline is the Strait of Hormuz blockade, where daily ship transits have collapsed from 70 down to just 2 or 5. President Trump says the ceasefire is on massive life support after rejecting Iran's latest proposal, which is a proper worry. This supply chokehold has sent WTI crude oil soaring 4% this week to $102.05. Aramco is warning that the oil market won't normalise until 2027 if this disruption continues past mid-June. Meanwhile, copper has gone absolutely nuclear, hitting a fresh record of $6.59 per pound. Gold is holding its ground like a champion near historic highs at $4,715.13. Silver had an absolute ripper of a session, surging over 7% to $86 before settling at $84. We also saw the first ever Hyperliquid ETF launch yesterday, pulling in very solid day one trading volume of 1.8 million. Bitcoin is defending $80,000 like a champ, currently trading at $80,735. Ethereum is hovering at $2,291, right on its 50-day exponential moving average support. Over on the ASX 200, it is a sea of red as the index drifts lower to 8,679. Our miners like BHP and Rio Tinto are the only ones thriving, both hitting all-time record highs on the copper surge. In the United States, the S&P 500 reached 7,412 before the inflation data hit. There is also a massive trade mission in Beijing right now, with Elon Musk and Tim Cook trying to secure demand. Let's see where the smart money is flowing today, and it looks like a rotation out of tech and into hard assets. Why did the latest inflation report just nuke the hope of any interest rate cuts for the rest of the year? The market is having a bit of a wobbler because United States inflation just clocked in at a hot 3.8%. This is the highest reading since May 2023, effectively slamming the door on any Fed rate cuts for 2026. In fact, traders are now pricing in a 30% chance of a rate hike by December, which is huge. Closer to home, the Reserve Bank of Australia hiked our cash rate to 4.35% to fight sticky inflation. But the real talk of the town is the 5-year-old Albanese Government's 5th federal budget, handed down last night. Treasurer Jim Chalmers called it the most significant tax reform in more than a quarter of a century for our nation. They are completely scrapping the 50% capital gains tax discount for all assets purchased after budget night. It is being replaced with an inflation-indexed model where you are only taxed on gains that exceed the consumer price index. Negative gearing is now restricted exclusively to new residential builds to try and boost the housing supply crisis. Even pre-1985 assets, which were exempt for 40 years, are being brought into the tax net from July next year. Treasury reckons these changes will help an extra 75,000 Aussies achieve the dream of home ownership this decade. However, the property lobby and VCs are worried this will disincentivise innovation and crush building starts across the country. Commonwealth Bank expects house prices to be 3% lower by the end of the year because of these new rules. It is a massive shift away from taxing income and more towards taxing assets to promote intergenerational fairness. We are also seeing the Aussie dollar versus the greenback sitting flat at 0.7240 today. How is the de-dollarization trend and the rise of the BRICS nations impacting the global financial order this week? India is leading the charge by proposing the linking of central bank digital currencies for all BRICS countries in 2026. The goal is interoperability for currencies like the e-rupee and Brazil's drex to bypass the need for the United States dollar. Iran has even started charging yuan-denominated transit tolls on tankers in the Strait of Hormuz as a live test. Brazilian President Lula stated that the group is committed to ending dollar dominance, no matter what the cost. This is leading many institutions to name gold as the structural winner of this long-term fragmentation of trade. Meanwhile, the European Central Bank and the Bank of Japan are expected to hold rates steady this week. They are issuing warnings that a prolonged conflict in the Middle East will drive up imported energy costs for everyone. Germany's economic sentiment is being closely watched as high power costs start to crimp industrial production in the Eurozone. China's role is shifting too. While their construction has cooled, their demand for industrial metals remains structurally very robust. In the tech sector, the Magnificent Seven moniker is officially falling apart as these megacaps stop moving in unison. The average correlation between these stocks has collapsed from 75% down to just 25% this year. Alphabet and Amazon are leading the pack, while Apple and Tesla are currently stuck in a proper technical downtrend. Nvidia remains the AI infrastructure king, with management targeting a $1 trillion market by 2027. However, Apple is facing massive headwinds in China from Huawei, and its AI strategy is seen as playing catch-up. Investors are now rotating into Halo stocks, heavy assets with low obsolescence to hedge against big tech volatility. These utilities and infrastructure firms are the new boring but safe play, while the Nasdaq starts to look a bit toppy. It is a week where the macro data and the geopolitical risks are finally starting to outweigh the AI hype. What are the legendary investors and the retail crowd on Wall Street bets saying about this crazy market environment? Warren Buffett called the United States stock market a casino at his latest Berkshire Hathaway annual meeting this month. He specifically called out one-day options and prediction markets as behaviour that has crossed the line into outright gambling. Berkshire is now sitting on a record cash pile of nearly $397 billion while waiting for fear. Buffett has been a net seller of stocks for several quarters, trimming his stakes in Apple and Bank of America. On the other hand, Cathie Wood just sold $15 million of AMD to buy $32 million of Shopify. She reckons AI is moving from a chip story to a commercial scale story, and Shopify is her top pick. Over on Wall Street Bets, the traders are absolutely foaming at the mouth over Rocket Lab and IREN Limited. Rocket Lab surged 11% pre-market, while IREN secured a $3 billion cloud contract with Nvidia. ASD Space Mobile is also a top ticker after a technical golden cross, with retail sentiment in the intense greed phase. Institutions are starting to scrutinise the SpaceX IPO, worried about becoming exit liquidity for Elon Musk. It is a proper battle between the cautious veterans holding cash and the retail degens chasing the next moonshot. Cryptocurrency sentiment is also red hot, with Bitcoin World reporting that social media hype is reaching explosive levels. However, some large whales are starting to offload hype tokens, with sales reaching over $12 million recently. Most analysts believe the market has already priced in the hot inflation, keeping Bitcoin above $80,000 for now. Solana is facing some technical rejection at $100, but developer activity on the network is up 45%. Let's optimize this entry by looking at the support and resistance levels you need to watch on your charts today. This is a proper golden entry for our technical analysis section, so let's check the data for our major assets. The S&P 500 is at 7,412.8 to 4, with an overbought RSI of 75.1. It is trading well above its 50-day moving average of 6,873, so expect a pullback. Our own ASX 200 is struggling at 8,679, with a very weak RSI of 39.4. The Aussie index is trading below its 200-day moving average of 8,804. That is a bearish sign. WTI crude oil is looking strongly bullish at $102.05 with support at $97.44. Gold is holding steady at $4,715.13 with initial support at $4,647. Its 14-day RSI is neutral at 52.5, which suggests it is consolidating before the next big move. Copper is at an all-time record of $6.59 per pound, with a record overbought RSI of 76.4. Analysts reckon copper could rise through the end of May, with final resistance at $7,020 per tonne. Silver is at $84.20, with support at $82 and key resistance up at $86.82. Bitcoin is defending $80,735 with a neutral RSI of 48.0. If Bitcoin can break $82,000, the next target for the smart money is $85,000 and then $90,000. Solana is at $94.49. It was rejected at the $100 psychological barrier this morning. Solana's 14-day RSI is at 37.3, which is a sell signal for many technical traders right now. Nvidia is still a strong buy technically, holding its 50-day moving average support at $208. Tesla is approaching resistance at $470. A break above that would be a major bullish signal. Ethereum is sitting right on its 50-day exponential moving average, support of $2,276. The new Hyperliquid coin is trading at $40.31, with support at $35 and resistance at $45. We are seeing golden crosses on Micron and AST Space Mobile, which usually signals the start of a structural bull run. However, the ACE X200 is flirting with a death cross if it can't reclaim that 200-day average soon. Bollinger Bands on Arista Networks and Shopify are flashing buy signals as they hit their lower bands this week. It is a very mixed technical picture, where metals are hot, tech is split, and the Aussie market is searching for a floor. What are the second-order effects of this energy blockade and the Aussie budget that we should be worried about? If the Strait of Hormuz stays shut past June, the structural loss of oil will make it impossible for the Fed to cut rates. This creates a stagflationary risk where energy costs keep rising even as the broader economy starts to cool down. In Australia, the removal of negative gearing for established homes could cause a capital strike in the property sector. Investors might move their money into high-yield miners or gold instead of buying that second-hand investment unit in Parramatta. This could ironically worsen the housing supply crisis if new builds don't come online fast enough to meet demand. We are also watching the de-dollarization trend as a long-tail risk that could slowly erode the greenback's global power. The Petroyuan tolls in the Middle East are the first real crack in the dollar-dominated energy trading system. Gold is the primary beneficiary here, acting as the ultimate filter for portfolios seeking to hedge against a fragmenting world. In the tech world, the AI infrastructure trade is maturing, and the market is now demanding real profits over potential. Companies that can't monetize AI quickly, like Apple and Tesla, will likely continue to lag the hyperscalers like Amazon. It is a time for professional traders to be extremely selective and avoid chasing the hype of the retail crowd. Remember, the record cash piles at Berkshire suggest that patience is the most valuable asset you can have right now. The technical indicators are flashing warning signs for the ASX, so keep a close eye on those moving average levels. Do you think the ASX miners can keep the index afloat? Or is the new property tax regime going to drag us down? Drop your boldest 2026 prediction in the comments below, and let's get a proper debate going, Gain Squad. If you enjoyed this snapshot, make sure to like and subscribe for your weekly dose of golden gains and market truth. Keep your positions tight and gains golden. I'll see you at the next close. Cheers.